So guys, let's start with the part which is called, like we have already learned, okay, with respect to the calls in arrear, and we also understand with respect to the interest on calls in arrear as well as interest on calls in advance. तो guys एक बार start करते हैं and we are going to try to understand what are the journal entries related to this particular calls in arrear and interest on calls in arrear advance, okay, and interest in calls in arrear also. So let's try to understand the journal entries first, how we can incorporate in the books related to these journal entries. Let's start this. Try to see how we are going to calculate these journals and how we are going to show it. Now everyone please make a note of that. Okay. Number one. So guys, when we make the journal entries, the basic journal entries we have, see, the calls in arrear, number one guys, the calls in arrear will happen at the time of making payment. Obviously guys, while we make the payment at that point of time, these sort of problems will going to happen. Okay, so actually let's take any sort of installment, either it may be allotment, first call or final call. So let's take the allotment call first. Example, so suppose fail to pay at allotment. Let's take the example hypothetically, okay, that any person has failed to pay the allotment. Then what will be the journals and what will be the other consequences that we are going to learn it. Okay, now see, number one case is that fail to pay the allotment. So the journal will be at the time of making the payment, the entry will be bank account debit, okay, as it is going to be a money that I am going to receive. So I already discussed that cause in arrear is nothing but your like loss to you, because this money you may not be received in future, or it is possible that you are going to receive it, so we have to debit this. So guys, you can write calls in arrear, or you can write calls in allotment also. It is better to write calls in arrear actually. Okay, so to equity share, as this arrear happened at allotment, so I can write equity share allotment account. This is what going to happen. So if fail to pay the at allotment, then bank account debit, calls in arrear account debit, okay, to equity share allotment. This is the journal entry that we need to follow. Please make a note of that guys, everyone. Wherever we pay the money, or whenever we are going to make the payment, okay, for any installment, then at that point of time the question of calls in arrear comes in the picture, and the journal entry related to the payment will consist only calls in arrear. Okay, this is the first thing. Second, so when we do the journal entry related to the bank, it means bank journal entries, then only calls in arrear will come into the picture. And respect to the interest, okay, see, as these calls in arrear is basically based on the amount that the shareholder has not paid, which was already called. So that when company call that you have to pay this much of money and the shareholder is unable to pay the money, then this much of these types of journal we are going to prepare. Okay, but obviously guys, it is quite possible that today is the 22nd January. So suppose today is the date that company made call, everyone need to pay the allotment money today, let's say hypothetically. But suppose one of the investor who holds 500 share unable to repay the money, and he has paid the money after 2 months of time. So he takes 2 months time to repay the allotment money which was due today. He take 2 months of time to repay the allotment money which is due today. So obviously company will receive interest on this due money for the 2 months. Okay, so what will be the journal entry, guys? As company is going to receive the amount from the shareholder. Okay, as the company is going to receive amount from the shareholders, so you can write directly bank account debit to, as interest is going to be received by the company, so it's an income to company, it's an income, guys. So you can write interest on calls in arrear. So what is the reason behind that, guys? When any money due, okay, when any money is due from the shareholder which he has not paid, so it is then income. Obviously any interest charge on the due monies, obviously income to me. So any money due but shareholders not paid the money, it is an income to company when the interest will charge on the due money. And bank means what comes in when the money is coming. That's why we made this journal entry. This journal entry can be make in a 2-part, but rather it is making easy. So bank to interest on calls in, you can do it, provided it is receivable, guys. Sorry, it is received. Obviously, this journal entry you can do only when money received. When money received. But suppose what happened? See, multiple circumstances can be given in the exam. You have to prepare very well. So if money is received, then this journal entry can be justifiable. But what if the money is not received? Your accounting are closed. Let's say today is the 22nd January. So after 2 months, it will be how much? 22 March. Okay. But what happened if the shareholder is unable to repay the money on 31st March? Your books is getting closed. So 31st March is the closing date. So what will be the journal entry you are going to make in your books? You are going to make in your books the journal entry is that shareholders account debit to interest receivable on calls in arrear. This is the journal entry we are going to make. See, here we are doing the journal entry based on shareholders account, okay, specifically, and interest receivable means we are going to receive the interest till it is due. So it is a due entry. When interest is yet to be paid, it's a due entry. But when interest is actually paid, after, let's say, after 2 months or 3 months, then the journal entry become interest, sorry, bank account debit when the money is received from the calls in arrear. So today is the 22nd January. You receive after financial year close, means after 31st March. So obviously this journal entry will suffice in the books of accounts, let's say. But also one more entry need to be passes. I am coming to that. So when you receive the money, the journal entry will be bank account debit to shareholder. That is a receive entry, guys. That is called the received entry. But the most important thing is that, see, shareholder cut it down, shareholder cut it down. Tell me, Ranush. Yes, interest due, yes. So when interest is due, it means it is not received from the shareholder. So when we make the due entry, so shareholders account debit to interest receivable on calls in arrear, okay. And when the amount is going to be received, the journal entry become bank to shareholder. But obviously, sir, there is one more account which is required to be transferred. Otherwise, how can I know that this become an income to company? So this interest should be transferred to where? This interest you need to transfer to the P&L account, correct? So profit and loss account is the account where you need to transfer this interest. So you can write here, guys. The next journal entry will be, sir, profit and loss account. Okay, no problem. Profit and loss account debit to, sorry, interest receivable, okay, because it's an income. Now you need to transfer this income to profit and loss so that you can know that it's a income for that year. So it's a transfer entry, guys, to the profit and loss. Interest on calls in arrear account debit to profit and loss account. You need to transfer this profit and loss to the P&L. Okay. So this is the journal entry that we need to make when transfer of interest for a particular period at year end. When you transfer the income to the P&L account, the journal entry will be like that. Interest receivable on calls-in account debit to profit and loss account. Okay. Noted down. I'm going to come back to the last page. Okay. No worries. Make a noted down this. Okay. So moving to the last page. See here, you can note it down this. Okay. Shareholder account debit to interest receivable on calls-in-arrear account. Bank account debit to shareholders account. Bank account debit to shareholders account. Please make a note of that. So guys, this is what with respect to the calls-in-arrear. So what we have discussed in the last class, guys, that in case of calls-in-arrear, what is the rate of interest? Sir, 10%. It's very clear, sir. What is the rate of interest at 10%? Okay. So let's take an example. I'm going to solve it. Before that, I'm going to come to the calls-in advance part. So guys, we discussed that calls-in advance is an advance money when you receive the money in advance with respect to any subsequent calls. Let's say for the first call money, you have received an allotment. So you receive on advance the allotment money plus first call money. You receive an advance. Some shareholder like that, they paid advance money. Okay. So what will be the consequence with respect to this? We all know, sir, that calls in advance is nothing but the liability for us. Okay. Calls in advance is the liability for us, sir. So can I write calls in advance? It's a liability, guys, and it's nothing but the current liability. Okay, it's a current liability we discussed actually. Actually, it's not like in the sense like you are saying liability. So we are going to show present this in the financial statement as a liability portion. Okay, it's a liability to me simply. Now see why I am discussing this current liability. It may be possible that the money, okay, that the money you receive, it may be for the next 2-3 months, because the money or dues on the other installment are happen within a like frequent basis of time, like 3 months or 4 months. It is not like that you receive allotment money today and you are asking for the first call money after 2 years. It's quite very rare cases this is going to happen. So that's why I'm saying you current liability. But believe me, this calls in advance is going to be adjusted as a liability part. Okay, you can erase this, not right now. You can, ठीक है, इसको रहने दो, कोई दिक्कत नहीं है as such. Now guys, see, as per the statutory requirement, the calls in advance consist of 12% rate of interest. 12% per annum rate of interest. That's what is very important. So calls in advance contain 12% per annum rate of interest. So sir, see, these journal entry will going to happen when? Same way, when the bank entry made. You can write here with star mark, when bank entry made, these calls in advance will be recorded. So when bank entry will be made, these calls in advance will be recorded. This is what very important. Okay, we are going to record when the bank entry will be made. So guys, now let's discuss. So a bank entry will made, these calls in advance will be recorded. Number one, guys, see, bank account debit, I am doing the journal entry. How to record the calls in advance? This is the journal entry. Bank debit, guys, to equity share allotment account. Let's take example that in allotment you receive the first call money in advance. For some shareholder you receive the first call money in advance. To calls in advance on first call money. You can write like this, not a problem. So that everyone can understand. What is written, sir? Bank account debit, equity share allotment account debit, sorry, to equity share allotment, to calls in advance on first call money. So bank is debit because you receive the money, or what comes in debit. Equity share allotment is credit because it's an allotment money. So it's a receive entry. When you receive the entry, so we have to debit the entry when it is due, and we have to transfer the amount, sorry, you have to transfer the account when it is paid. So guys, just remember this. I just go back to the last class. See here what we have discussed thoroughly. When the allotment money become due, then equity share allotment to equity share capital, and when it is paid, then the journal entry will be bank to equity share allotment. This we have discussed. Okay, the same way I am going to solve it. So see, equity share allotment account credit and calls in advance, because it's a liability, guys. It's a pure liability. That's why credited. Now, obviously, guys, in the next, when, see, after 2 months, and if I take the example, after 2 months, when first call money after 2 months, when the first call money will be called up, what happened, do you know? When the first call money will be called up, after the 2 months, when the first call money will be called up, then these calls in advance, write down here, it will be adjusted when call money to be paid. See what written here? These things, these calls in advance is only to be adjusted at the time when call money to be paid. That is what I've written. Okay. So I am pretty much sure that we can adjust this when the call money is to be paid. Okay. So now can I write here, guys? देखो एक बार. See, I am receiving the calls first call money. So obviously the same journal entry I am going to make, bank account debit to equity share first call. Same way guys, when you receive the first call money. But now the time has come. See, no, yes, this is based on the 2 months when you receive the first call money. So after allotment, see, suppose today is the 22nd January, okay. So we receive the first call money in advance for 500 shares. Suppose there is a shareholder who hold 500 shares. He gives us extra money because he will be out of the country. So he pays extra call money on advance on his 500 shares. So when he receive the advance money of 500 shares, I am going to make an entry. So calls in advance is created. But now, as I have already received the money with respect to the first call, now when I am going to receive and call the first call money after 2 months, that is 22nd March, then I am going to do it. These calls in advance, I am going to adjust with the money when I receive the first call money, because I already received the 500 shares. So see what I am going to do. Suppose let's take an example. Whatever the number of shares you are going to issue, you need to just deduct, see here, number of shares, total number of shares minus advance, you can say advance money, sorry, share based on advance money, you can write advance money shares into first call money. That is the formula. So I make it elaborate a little bit. It will be very easy for you. So if I wanted to show it, how this bank account will be happen, now see, total number of shares into, you can write face value, make it more easy, of first call money. First call money जितना due हो रहा है वो होगा face value of first call money, sir, minus calls in advance. If you do it, then the net amount represent that how much money you are going to receive with respect to the first call. Because see, this money you already received, na? So why you are going to receive this money again on 22nd March? Because the person who is going outside the country, he has already paid the money 2 months before. So this money need to be deducted from the total money you are going to receive. And obviously guys, you have a liability with respect to the calls in advance, which is showing or presented in the balance sheet. But as the time has come when the first call money is going to be due and going to be received, then this liability is going to be transferred, so that your books is not going to show this liability, because the money become due. Until and unless the money is due, it will remain as a liability. But when the money is due and going to be received, we need to just make an adjustment. What is, sir? See, when we receive in advance, I made in credit. So when we adjust it, we are going to debit. It's very simple. Call in advance on first call money, account debit to equity share first call. So here will be the money, here will be the money, and equity share first call will be the money. See, we have done. It's very easy. So calls in advance money, this money will be transferred as a debit, and bank will have total amount to be received minus calls in advance, and equity share first call will consist both the addition of the amount, actually what is due. And guys, obviously the person who pays extra money, or who pays in advance 500 shares of first call money, the money so received, we have to pay some interest to that. So can I write interest on calls in advance? Because as we received advance money on of first call, obviously I have to pay the interest for 2 months, because after receiving this money on January, I have used the money for my business purpose. So obviously I have to pay the interest to the shareholder on 22nd March. So when I pay the interest, it becomes an expenses to me. So can I write interest on calls in advance account debit? Correct? Because it becomes an expenses when I pay this money. I have to pay, na guys. And guys, what we need to debit? See, I am making a breakup entries to shareholders. It's a due entry, guys. Interest due entry. And when we are going to receive the money, so the journal entry will be, sir, when, sorry, it's not received, it's paid, huh? Because calls in advance we are receiving, for which we need to pay the interest. So when you paid the money, the journal entry will be, sir, see, shareholder account debit to bank. First we due the entry in the favoring of the shareholder account. So interest account debit to shareholder. When you paid the money, shareholder account debit to bank, because bank is credited as money goes out. Okay. And yes, interest on first call money in advance. Okay. So what is the rate, sir? 12%. We know that, sir. So we have to calculate 12% into calls in advance. So whatever the calls in advance money we have, we need to multiply with the 12%. Obviously, we have to give the proportion, na guys? Because 12% is the per annum rate, means 1 year. So if the advance is for 2 months, 3 months, then we have to calculate with respect to the proportionate period, let's say for 2 months or 3 months, and then plot there. And these calls in advance need to be transferred to profit and loss account as an expenses. So when transfer to profit and loss account, the journal entry will be, obviously profit and loss should be debited because it's an expenses to interest. This interest is debited, so we need to transfer it, so it should be credited, sir. Sir, completed. Okay, so this is what the journal entry and the fundamentals with regard to the calls in advance and calls in arrear. Done. Now let's do one example and make your concept much more clear. Okay, just note it down this, guys, and if you guys have any doubt, anyone, please let me know. We have understand all the full-fledged concept regarding the issue of shares. So guys, should I move? All done? Hashmita, Kruti, Ranush, Jivita, all done? Good. अच्छा ठीक है लिख लो. Please confirm me. When you guys done, please confirm me so we can start one sum directly. And if you have complete, yeah, great. So guys, who has completed the PDF that is shared, please open the PDF and go to page number 11.51. Those who have completed, go to page number 11.51 with respect to the PDF that I have already shared with all of you guys. Page number 11.51. And Ranush, also you can open, okay, company accounts chapter, okay, unit 2, chapter number 11, okay, go to page number 11.51. Okay, see. Let's discuss, guys. Then we are going to solve this. देखो क्या बोल रहा है. Rasmi Limited issued at par 1 lakh equity share of rupees 10 each payable 2.50 on application. Okay, so Rasmi Limited had issued 1 lakh equity share. Okay, of rupees 10 each payable of rupees 2.50 on application. अच्छा 3 on allotment 2 on first call and the balance on the final call. So 2.5, 3 is 5.5, 2 is 7.5. So 2.50 is the balance amount. All the shares were fully subscribed. Mr. Nair, who held 10,000 shares, paid full remaining amount on first call itself. So when we are going to make the first call, okay, so obviously there is a final call obviously there. So when the first call money is due, at that point of time, there is one shareholder who held 10,000 shares has paid the final call money along with the first call money. Who has paid final call money along with the first call money. Okay? Now see, the final call which was made after 3 months from the first call was fully paid except a shareholder having 1,000 shares who paid his due amount after 2 months along with interest on calls in arrear. Company also paid interest on calls in advance to Mr. Nair. Give journal entries to record this transaction. It's a very good sums. Okay guys, so both we are going to learn here, interest on calls in advance and interest on calls in arrear. Both the way we are going to learn it. Okay. So guys, please go through it, and till that we'll make a format also that. Okay. Everyone please go through the sum once. We have both calls in advance and calls in arrear. Both we have. Okay guys, let's see. See the format we have drawn already. So now, see, it's a journal entry format. So we need to do these journals, okay, thoroughly. So first of all is that books of Rasmi Limited, that is a journal entry. So number 1, sir, date, particulars, ledger folio, debit and credit. And always remember, whenever you make any journal entries, please give the journal entries which is actually objective for which objective you are doing the journal entries. It is related to the issue of shares. You can write here, it should be easy. So now let's start, guys. Number 1, if you discuss little bit, see here, the question given that Rasmi Limited, okay, Rasmi Limited issued at per 1 lakh equity shares of rupees 10 each payable on 2.50 application and 3 on allotment, 2 on first call and balance on the final call. So the final call balance is how much, sir? So if you are going to check this, so can I write like this? Sir, face value is 10 rupees. Here we have 4 parts. One is called, sir, application. I can write easily. Sir, rupees 2.50 guys. Another is called, sir, how much, sir? Rupees 3 on allotment. I can easily write down this. After this, sir, can I write here first call? Sir, rupees 2. So, sir, how much is the balance left? Sir, 2.5, 3 is 5.5, 2 7.5. So, first final call, rupees 2.50. Done, sir. It's completed. So, this is what the installment I have made it for calculation so that you can understand. Okay. So, now guys, the first entry that you need to do, sir, we have to make the journal entry related to the application money so received. And guys, there is no such date is given. So, you can just keep and you can write here. No, nothing. You can write here nothing. Okay. As nothing is given, so I am just ignoring it. So, here you can write bank account debit. To equity share application. Okay. That's a very basic journal entry. So, bank account debit to equity share application, how much, sir? Sir, 1 lakh equity shares issued on rupees 2.50 on application and also fully subscribed. So, when it is fully subscribed, so can I write here 1 lakh into 2.50 guys? 1 lakh into 2.50. So, how much it is, sir? 2,50,000. It's quite easy, sir. It's completed. Sir, 2.250,000. It's completed. So, guys, right now, second, narration. Okay, we have already learned the narration, so I'm not going to put the narration so that you guys make a practice. But always remember, whenever you do the journal entries, put the narration compulsorily. Okay. So guys, number two is that, sir, equity share application account debit, because no such any hurdle has been there in the application. So it's a simple journal entry that we are going to make and complete to equity share capital. It's a transfer entry to the capital account. So equity shares capital account, guys. You can write it down, huh? So it's done, sir. So it is 2,50,000, guys. So it's already done. Third. So now from third onwards, we have something else. So first, the due entry is having no problem at all. If you check once, the due entry will be having a no problem at all. Okay. देखो यहाँ पे, in case of due entry, guys, so what he says after this, Mr. Nair, who held 10,000 shares, paid full remaining amount on the first call itself. So Mr. Nair, who held 10,000 shares, will pay the full amount on the very first call itself. Okay. So what I'm going to write, the first of all, I need to do the allotment entry. Okay. And okay. So see, guys, we have all the adjustment. We're going to start from first call. What are the calls in arrear and calls in advance? We are going to start it from first call, not from the allotment. So just simply do the allotment entry, guys, like the way we are going to do. Sir, equity share allotment first due. Everyone please copy this, guys. To equity share capital. Sir, 3 rupees. So 3 rupees is 1 lakh, 3 lakh. And then we are going to receive the money. Bank to equity share allotment account. Done, sir. Bank to equity share allotment done. ये complete हो गया. The fourth entry also being completed. Now we are going to start for the entry of first call and final call. Okay. So guys, if you check once, now let's go through question once. Mr. Nair, who held 10,000 shares, paid full remaining amount on first call itself. So when the first call money become due of rupees 2 for the 1 lakh shares, he has already paid the first call plus final call on the first call money. So final call money is what? 2.50. So for 10,000 shares is how much, sir? 25,000. Correct. So 25,000 extra we receive at the first call. Okay, this is what the question that is says. And after this, the final call which was made after 3 months from final first call was fully paid except a shareholder having 1,000 shares who paid his due amount after 2 months along with interest on calls in arrear. So guys, see, final call money become due after 3 months. So Mr. Nair, okay, paid for his 10,000 shares 3 months in advance. So the calculation of interest on calls in advance should be made for the 3 months. And see, one of the shareholder is there who has held 1,000 shares, okay, who has paid the final call money due after 2 months after the final call. It means the person who held 1,000 shares, he failed the money to pay at the final call. But finally, he has paid the money after 2 months along with the interest. That is what says. Now we need to calculate the interest on calls in advance and interest on calls in arrear, but provided nothing as such given. So can we assume guys 10% for calls in arrear, 12% for the calls in advance. So that is what says. चलिए solve करते हैं इसको एक बार. So the first we need to make a due entry, guys. Due entry is very easy. Equity share first call account debit, equity share first call account debit to equity share capital account. Equity share first call account debit to equity share capital account. That is what the journal entry we made. Okay. So here you can write the amount you can see here 2 rupees. So 1 lakh के ऊपर 2 rupees कितना होगा 2 lakhs. Okay. Write down these guys first. Okay. Now this is what we are going to make the adjustment. चलिए start करते हैं एक बार इसमें. See guys, now I am going to receive the money. Guys, I am going to receive the money. Now see, guys, we discussed thoroughly that when we making the payment entry or we making the like receive entry for us actually, and in case of shareholder the payment entry, then the journal entry will be bank account debit when you receive the first call money. Okay, as we receive the calls in advance, so obviously we have to make calls in advance on final call. Can you write like this? And guys, this amount is actually belongs to the equity share first call and final call. So the bank account, what is debited here, first represent equity share first call. Okay. So how much sir here? Can I write here like this? देखो एक बार. Sir, equity share first call is 1 lakh into 2. See here 2. And final call is 2.5. So can I write like this? Calls in final call advance is 10,000 shares of Mr. Nair into 2.50. So see, it is 2 lakh rupees. It is 25,000 rupees. So the total amount we receive 2,25,000 rupees. Done, sir. First call is done. No problem at all. Now we are going to do the final things. So we are going to do the final thing. See, number 7. So the first is the due entry. So final call due entry is what? Equity share. Can I write like this? देखो तो. Equity share final call account debit to equity share. I can easily write down this. Equity share final call account debit to equity share capital. How much, sir? Obviously 1 lakh share is there into 2.50 is the final call money. So 2,50,000. 2,50,000 guys, please copy it. Two lakh 50 now comes here, huh? Now everything is there. See, the final entry is that, sir, bank account debit, obviously, when we going to receive the calls, when you are going to receive the calls, okay? So here, sorry, bank debit. Now, the amount so receive as advance we have to get debited because it is a credited when it is received in advance. Now when we need to adjust this advance money with respect to the actual call, final call, so we need to make a debit that we learn actually. Okay guys, but see in the question you may find it is given, sir, that 1,000 shares who paid his due amount after 2 months along with interest on calls in arrears. Along with interest on calls in arrears. So guys, see 1,000 shares multiplied by 2.50, that is 25,000, is also an calls in arrears. Sorry, 2,500 also a calls in arrear. So guys, can I write like this? देखो देखो what we learn, sir, calls in arrear will be on 1,000 shares multiplied by 2.50, that is 2,500. Okay, and our calls in advance is 25,000 need to be debited, and 2 equity share final call. So this is a final journal equity share final call account. So guys, equity share final call is how much, sir? 2,50,000. So one thing you can do, you can direct this minus these two, you can get the answer here. So 500 is the final answer here. Okay, these are very easy. 2,50,000, the actual amount due on final call, minus advance received in the earlier call, minus calls in arrear in this call. Okay, now guys, this is not the complete. We have to pay the interest along with on the advance, as well as we have to receive the calls in arrear advance along with the money. So see 9. So just try to understand these calls in advance made as per the question you see, it is actually made final call which was made after 3 months of the first call. So we receive first call, okay, we receive in first call, and after 3 months we called the final call. It means the calls in advance will have 3 months interest to calculate. The calls in advance has 3 months interest to calculate. So can I write here interest on calls in advance account debit to Mr. Nair account? I can write down, guys. Easily I can write down. So here he is a shareholder, so you can also credit shareholder rather than this, or you can do the Mr. rather than Nair, or shareholder account you can credit. So can I write here, guys? Interest on calls in advance, देखो तो यहाँ पे 25,000 is the calls in advance. We know that, sir. See, multiply by 12% and 3 by 12. Now see calculation, how much it is calculate. मैं कैलकुलेट निकाल लेता हूँ फटाफट. देखो तो एक बार कितना आ रहा है गाइस. 25,000 into 12% coming 3,000 into 3 by 12. So it's coming, so 750. So it's coming 750. It's done. Now this amount we need to pay after 3 months, correct, when you do it. So 1020 is that. Mr. Nair account debit to bank. Just try to understand here. As Mr. Nair is a personal account and he is a receiver of the money, so as per the personal account, receiver is the debit. That's why debited. And bank is created because from our pocket money of 750 rupees goes out. 750 rupees goes out from our pocket. So that's why it is created. So Mr. Nair account debit to bank account. Number 11, guys, comes to here. Number 11. देखो अब guys, in number 11 we have to make calls in arrear entry. Okay, calls in arrear entry. So what we are going to make here, we can write, sir, shareholder account, because as there is no name is given, shareholder account debit, okay, to interest interest on calls in arrear. Interest on calls in arrear. So how much is that? Obviously sir, you can calculate easily. Sir, here 2500 is the calls in arrear money. Where sir found it? See, into 10% because nothing is given. And after how many months the shareholder has paid the in the calls in arrear money? After 2 months it's given sir. Just try to see. Let's check it out. See, I am making in a highlights. 1000 shares who have paid the due amount after 2 months along with interest on calls in arrear. Okay, so 2 months का calculation कितना होगा देखो. 2500 into 10% is 250. So 250 divided by 6, you will get 41.67. 41.67 is the correct one. Correct. 41.67 is the correct answer. Now, last entry. Guys, after 2 months, the shareholder has paid the money along with the interest. So, we need to make full journal entry. Okay. See, we receive the money from the shareholder. What is the amount due on calls in arrear? 2500. We receive 2500 along with the interest. So, can I write here 2500 plus 41.67? Because interest on the calls in arrear 41.67. So, if we add this 2541.67 to, see, interest on calls in arrear, it's an income to me. Interest on calls in arrear is income to me. And also shareholder I need to pay. So, how much I need to pay to shareholder? Sorry, how much I am going to receive from the shareholder? That is 41.67 plus 2500. So, can you write, when I receive the money on calls in arrear, okay, as I debited calls in arrear, when there is a due entry, when the amount is not paid by the shareholder, and when I receive the money, like the same way that calls in advance we made, we just credit the calls in arrear. And obviously, shareholder is going to pay me the interest of 41.67. Also I made there. So 2500 and 41.67. That is done, sir. So now this is a very complete sums with respect to calls in arrear and calls in advance with your interest at all. It's completed, sir. Okay, completed, sir. I'm moving on. See, now let's a little bit discuss about the prorata. See, this prorata, you can say this prorata allotment is mainly going to be discussed when there is a case of over subscription. As we already discussed regarding the over subscription status, we are going to make a little adjustment along with one sum so that your fundamental will be little bit clear and thoroughly clear. Prorata is when happen. Number one, when there is an over subscription happen, it means when you receive more, than what you have issued to the public. Suppose you issued to the public, let's say 10,000 shares. Okay, we issued 10,000 shares. Somehow the application has been submitted by the applicant, you can say, let's say 15,000 shares. It's quite possible that your company is good and you receive larger amount of subscription. But what happened with respect to those 5,000 shares for which extra money has been received by the company? So with respect to those extra money, company can do two things. Number one, sir, either 5,000 excess money can be refunded by the company and those shares for which application is excess received is rejected. Or whatever the extra money has received by the company will make an adjustment with respect to the future called up money with respect to this excess amounts to receive. So the excess amounts to receive for those 5,000 shares we are going to first calculate, and this amount will going to be adjusted in the future installment money, or let's say in allotment money. So the amount to be due on the allotment money will be settled off or adjusted with the application money excess received. And this adjustment in the application money with the allotment is nothing but, you say, pro rata adjustment. You can say pro rata adjustment, means proportionally adjustment. It means proportionally adjustment. That is called pro rata adjustment. So these two things are possible. One is straightforward refund and rejected, and second one you can adjust it. Even the third condition, even the third possibilities is there. Some part refunded, some part is adjusted. Means mix of refund and adjustment. Let's say 1,000 shares are refunded out of 5,000 and 4,000 shares is going to be adjusted against the excess money and with the allotment. So these three types of situation can be arises with respect to the pro rata allotment. Let's little bit discuss and try to understand with an example with this what is this pro rata. Okay, see, if you see this in the institute mat, okay, just 1 minute. Yeah, coming guys, page number 11.44 coming here. Let's discuss little bit. See, over subscription. Okay, I just off my video so that you can get a pure picture view. Over subscription and pro rata allotment. Over subscription we discuss thoroughly. Okay, when the number of shares offered, okay, to the public is less than the application received by the company, and it usually occurs in case of good issue and depends on the many other factors like investor confidence in the company, general economic condition, like multiple factors. Your company is very good in the business, so obviously you will going to receive more response from the public. That's what happened in case of over subscription. When your company's balance sheet is good, when your company's profit and loss is good, when your company's order size is good, when your company's cash balance and with respect to the business for the future perspective is very good. If all these are positives, then obviously investor will going to show confidence on your company. Then you are going to get the excess application, okay, with respect to your offer to the public. So it means that a decision is to be made on how the shares are going to be allotted. Shares can be allotted to the applicants by company in any manner it thinks proper. The company may reject some applicants in full. There is no shares are allocated to some applicants and application money is refunded. Usually multiple application by the same person are not considered. Obviously guys, see, that is what important. Multiple question may comes from here. That is, sir, how it is possible that देखो आप लोग यहाँ पे try to understand that it is not like that कि a person is going to apply for multiple shares. Okay, because we are like as a company we cannot issue lot of shares to a single individual rather than going to distribute the shares to everyone. so that everyone get a fair bit of chance to invest in the company. So that's why when it is happen now, when these types of situation is going to happen, so when excess application is made by any single individual, we are going to reject the same, but other things are going to adjustments against the allotments. Here written, multiple application by the same person is going to be rejected, not considered. Allotment may be given to the rest of the applicant in full, that is for the number of shares they have applied for. A third alternative is that a company may allot share to the applicants on pro rata basis. Okay, pro rata allotment means allotment in proportion of shares applied for. See what is written, very important. Pro rata means allotment in proportion of shares applied for. Okay, sir, two things are very important here. Let's discuss two things. See guys, one is called application received. This is very important. And the other word is called allotted. Application received means how much shares application we received. For how much shares we received the application, that is what called application received. For how much shares, okay, for how many shares you can say. How many you can write please. And what is called allotted? Sir, see, company is having a limited capacity to issue the shares because it has a maximum capital to be set when the company is incorporated with the MCA. So obviously guys, the maximum number of shares that company can allot to its shareholder or investor is called the allotted shares. So allotted by the company as per policy and process. So application is received, okay, and allotted is given. So application received for how many shares, and allotted means allotted by the company as per the policy and the process. So these two terms is very important. Always remember guys, this is going to be much higher than this one. Application received means it is quite possible that as a human being I can apply for 500 shares, but company gives me only 200 shares. So 300 shares, either it adjusted or rejected. It's quite possible. So this is what called the application received and the allotted. So application means how many shares I am applied for, and allotted means how much shares or how many shares the company allotted to me. It's also called actually applied for. This is the another language. So you can applied for. So you have a very clear cut idea regarding the different terminology with respect to the issue of shares. Anything can be asked in the examination question. Okay, application received, applied for, allotted. So these are the three situations you just need to remember once. Okay, let's discuss further. See, an example is given. Let's say, what is the example is given? What is the example given? See guys, in this example, if you're going to see it, a company offers to the public 10,000 shares for subscription. No worries. The company receives application for 12,000 shares. If the shares are to be allotted on pro rata basis, applicants for 12,000 shares are to be allotted 10,000 shares. See, company offers 10,000 shares. Company receives 12,000 shares. If the shares are to be allotted on pro rata basis, so applicants for 12,000 shares are going to receive 10,000 shares. It means the ratio become who has applied for, okay, who has applied for 12,000 shares is going to receive only 10,000 shares. So see, can I write like this? Here, so in this vertical, I can write, sir, 12,000 shares application received and company is going to allot Only 10,000 shares, because obviously company offered for 10,000 shares. So how can it be possible that company is going to offer more than 10,000, that what he had promised at the time of offering to the public? So 10,000 shares. So the ratio become in between these 6 to 5. So ratio depicted what? Who has, it means who has applied for 6 shares will going to received 5 shares. It means, sir, who have applied for 6 shares will going to receive 5 shares, or will going to be allotted, or you can write here, very good language also, or to be allotted only 5 shares. So let's say Mr. X is there, who has applied for 6 shares is going to receive 5 shares. Suppose you can write like this, Sinchen is there, Sinchen. So Sinchen applied for 120 shares, guys, okay. Sinchen applied for 120 shares. So it is an application received. He has applied. But if you see practically, okay, Sinchen is going to be allotted by the company not 120 shares. 120 shares is applied for to the company, but he is going to receive with respect to the ratio of 5 to 6. It means 6 shares is applied, which is equivalent to the 120 share, guys. If I going to show you the unitary method, 6 shares he has applied, which is equivalent to 120 shares. So for 1 shares, how much he is going to receive? 120 by 6. So for 5 shares, he is going to receive how much, sir? 100 shares. So this is called pro rata adjustment. So when this shareholder is going to receive only 100 share, so the biggest question is that, sir, what about the remaining 20 shares money that he has paid at the time of application? So the remaining 20 shares money will be adjusted against allotment. So the amount that the Sinchen has paid to the company with respect to those 20 shares for which he has not received the allotment, those 20 shares is going to be, the money with respect to those 20 shares is going to be adjusted against the allotment. So let's say Sinchen paid 100 rupees with respect to those 20 shares. Let's say application money 5 rupees. So 20 into 5, 100 rupees. So the 100 rupees is going to be adjusted with respect to the allotment money due on those shares for which Sinchen has allotted. So when Sinchen is going to pay the allotment money, let's say, so allotment money will be due on 100 share, guys, because actually 100 shares are allotted na. So 100 shares के ऊपर ही तो होगा allotment. So allotment money will be on 100 shares. So when these 100 shares money become due, okay, it will be deducted from the excess application money so received on 20 shares. So whatever the money is, like let's say 100 rupees. So the allotment money so due on the 100 shares of Sinchen, okay, it going to be adjusted against the excess application money so received on 20 shares. Then only the excess money so received from the Sinchen is nullified and adjusted against the future money or future installment due. That is what the concept of pro rata allotment. That is what the concept of pro rata allotment. Just copy this, guys. Let's take an example and make more comfortable to that concept. Okay, let's take one example. Journal entry we have learned at the time of oversubscription concept. Okay, let's see. Come to question number 7, guys. See what is given. In the question number 7, it is given quietly. JHP Limited is a company with an authorized share capital of 10 lakh rupees in equity shares of 10 each. Okay, it means, sir, we have 1 lakh shares at the rate 10 each. Okay, so it is a maximum. It's a maximum authorized share capital. It's a maximum authorized share capital. Okay. Of which 6 lakh shares had been issued and fully paid on 30th June 2021. The company proposed to make a further issue of 1 lakh of these 10 shares at a price of 14 each. The arrangement for payment being. Guys, one thing let you very, very much clear that this is going to be wrong. Okay, this is very wrong. I think so. If we just read the question first. Yeah, guys, this is, I think so, wrongly made by the institute. Okay, like it may be printing mistake happen. Okay. See, you can please make a correction on that. It is not 10 lakh. It will be 10 lakh shares. Rupees ko kaat do, it will be 10 lakh shares. Because see, what happened now? Because see, if the company's authorized share capital is 10 lakh only, how could it be possible that company issue more than 10 lakh? Because if it is 10 lakh, if you divide with rupees 10, then you are going to get an answer of 1 lakh share authorized capital. So if company's authorized share capital is 1 lakh, so how it would be possible that company issuing 6 lakh shares? Not possible. So please make a correction of that and make it 10 lakh shares. Okay, not 10 lakh amount as an amount. So guys, out of which 6 lakh share had been issued and fully paid on 30th June 21. The company proposed to make a further issue of 1 lakh of these 10 shares at a price of 14 each. So the concept is coming. See, the company is going to further issue of 1 lakh shares of rupees 10 each at a 14 each. So guys, what we discussed in the last class, that any price over and above the face value is going to be said as premium. So here the face value is 10 and your issue price is 14. It means 4 rupees is a premium on share. That is a securities premium. The arrangement of payment being 2 per shares payable, so is 2 per share payable on application to be received on 1st July 21. So it means after this 6 lakh issue, 1 lakh shares is also going to be issued on 1st July, for which 2 rupees is an application. Allotment made on 10th July 21 and a further 5 per shares to be payable, including the premium. So let's just check out. If your premium amount is 4 rupees and allotment money is total 5 rupees, which is inclusive of premium, it means the actual allotment money is 1 rupees. It's clear, guys. If your allotment money, okay, is rupees 5 per share, which is inclusive of premium, then actual allotment capital money is what? 1 rupees. Okay. The final call for the balance to be made and the money received by 30th April 2022. It means, see, on 10 July the allotment money is due. Okay, but actually 30th April the final call was made, means after lot of time. Let's say after 5 and 4, 9 months, almost 21 days. Okay, the final call was made. Now application were received for 3,55,000 shares and were dealt with as follows. So You have issued 1 lakh share, guys, of rupees 10 each at a price of 14 each, but you received 3,50,000 shares application. See how this bifurcation has been made. Applicants for 5,000 shares received allotment in full. Applicants for 30,000 shares received an allotment of 1 share for every 2 share applied for, and no money was returned to this applicant. The surplus of application being used to reduce the allotment due on allotment. Very good. Applicants for 3,20,000 shares received an allotment of 1 share for every 4 share applied for. The money due on allotment was retained by the company and the excess being returned to the applicants, and the money due on final call was received on the due date. So whatever the money that is going to be received on the due date has been paid by the shareholder with respect to the final call money. So it's a very, very good type of and sums, and a very, very good variation of this. Okay, let's make an understanding of these sums. Just try to understand here first. In a given question, if you see, we have applied for, देखो मैं यहाँ पे आपको दिखाता हूँ. Just I am requesting, please go through once this question. Okay, just go through one this question. Then I'm going to try to make you more comfortable on the question first. Okay, then guys, here written total share offered by the company is 1 lakh. It's clear cut written, huh? This one, because we are only discussing about this issue, because 6 lakh already has been issued and fully paid. So the problem and the concept related to the 6 lakh has been done there, but we are discussing all about the 1 lakh shares. Okay, so first try to understand how this is going to be adjusted. So 2 is application, 1 is allotment, so 7 is the final call money. So the calculation is that we are going to receive 1. Okay, we are going to receive 1. देखो यहाँ पे देखो, मैं एक बार एक चीज दिखाता हूँ यहाँ पे. If you this first 7-8 line there with respect to the first one, we can easily understand 2 is the application money. Okay, so if your face value is 10, okay, and issue price is 14, it is obvious that out of face value, rupees 2 is on application, correct? Rupees 1 is on allotment, correct? And rupees 213 and then 7 is on final call. And with respect to this, if you add this one, you will get rupees 4 on premium, which is also to be added here in allotment. So make it 5. So face value is 10, out of which 2 is on application, and allotment is actually 5 rupees, which is also including of premium 4. So it is 1, and then final call is rupees 7. Great. So this is what the first thing. Now if we discuss more from this, now here come, out of total shares offered for 1 lakh, 3,55,000 application are received, of which those who has applied under the category 1, that is this one, it is called category 1, they are received full shares. Those who applied for 5,000 shares receive 5,000 shares in full. Category 2, those who applied for 30,000 shares, okay, they get, okay, 1 share for every 2 share applied. So if any shareholder applied for 2 share, he is receiving only 1 share from the company. Okay, and no money is going to be returned to this applicant, and the surplus, that is, let's say anyone applied for 2 shares, he is going to allocate 1 share only. So excess 1 share money the person has already paid. So this excess application money is going to be adjusted against the amount due on allotment. Make it clear. So the way that we discussed, that is the same thing. Any excess application money is adjusted towards the due of allotment money with respect to those category 2 shares only. Come to category 3. applicant for 3,20,000 shares received an allotment of 1 share for every 4 share applied. So guys, under the 3,20,000 applicants, those who applied for 4 shares is going to receive only 1 shares. It means the ratio become what? 1:4, means who have applied for 4 is receiving only 1, and the money so excess received with the 3 shares. Suppose of socho, you guys please, if you applied for 4 share and you receive 1 share, it means you already paid 3 extra shares money at the time of application. If you get 1 share only out of 4 share you applied, it means the difference between this duo, that is 3 shares excess application money you already paid and the excess being returned to the applicant. देखो यहाँ पे क्या लिखा है, the money due on allotment was returned by the company. Whatever the excess money that is required only for the allotment to be due under this category is going to be retained, and any excess money other than this required for the allotment is going to be given to the applicants, means refunded back, and no money is pending in final call. Got my point? Under category 3, with respect to 1:4, any excess money received first going to adjusted against the allotment money due, and then if any balance is going to be left, it will be returned to the applicants. So it's a very interesting. चलिए बस आपको दिखाता हूं मैं. देखो, shares offered by public, sorry, shares offered to public actually. $1 lakh. Application received 3,55,000 guys. Now see, with respect to this 3,55,000 in category 1, for 5,000 shares, those who have applied given full shares. So in this category we don't have any issue at all. It is a very easy category. And in category 2, those who applied for 30,000 shares, this is applied for, you can write, and here you can write this is allotted, you can write, okay, this is applied for and this is allotted. In the given case, the ratio is, you can say the pro rata ratio is what? Pro rata is 1:2. It means 15,000 shares has been allotted to them, and in this given case we have category 3 where we have received 3,20,000 shares application, okay, and the pro rata allotment is how much? 1:4. It means only 80,000 shares has been allotted. If you add all these 3 shares now with respect to the allotted, you get 1 lakh. Here 5,000, here 15,000, here 80,000. If you add these 3, this, you will get 1 lakh. So this is what the pro rata allotment adjustment concept. Okay guys, this is what is called pro rata allotment adjustment concept. This is we need to first understand. If you're going to understand, then everything is going to get easy. Okay.